we had in this instance on Wednesday we had a bullish pin bar reversal, false breakout of this triangular formation. We also had, for those people, a simple false breakout under the trend line here as well. And those harmonic traders who look at Elliott waves, got wave 1, 2, 3, 4, 5, come to the end of the 5th wave. So could this be the start of a new Elliott wave formation on the way up? Now we've had the complex retracement here, as demonstrated in a triangle. Well, we'll see. And the elections, basically we had no idea who was going to win, of course, but we did have our hedge. We had, if the pound was to rally or dump as a result of the election results, we had a position either side, so we could take advantage of either eventuality, and of course we had good reward to risk with it as well, so that we could benefit either way. So in this instance we had tentatively a difference of 200 pips between entry and stop loss, and a target of about 869, which is essentially a 4-to-1, a very good reward to risk trade, especially if you're risking 2% of your trading account on that one. This is correlating just in advance of the previous swing high here. I know a number of you are looking for that one. Absolutely fine. Of course, as the Tories got in, that was good for cable, which rallied off the back of that, and today we are seeing a well, potentially a close as a bearish pin bar reversal, but you know, we're about well, 10 hours away from the close of the market, so anything could happen in this time. We're just seeing some intermediate retracement here, and for those people who just want to hang on in this trade until it hits targets, we're not far away from targets, we're over halfway there, then great, hang on in there and enjoy the ride. I mean, it's a trend-based opportunity. We've got the most efficient entry we possibly can from it, with our entry just above the high of Wednesday, plus spread plus additional pip just above this point here, stop loss below the low. What was good about it from a technical standpoint as well is the higher low, and that's always essential when we're looking at time frame correlation, and the fact that the higher order time frame traders and the lower order time frame traders are essentially singing from the same hymn sheet, and that's absolutely important, essential when we're looking at trading financial markets. We've got what we could argue to be the smaller cogs in the machine, i.e. those people trading the hourly and the hourly formations based on price action, driving the bigger wheels, which are essentially the activator bars and setup bars on the daily. So we had a very neat setup there. Conversely, we are also looking at selling pound yen on the weekly, just in case we did get that shock victory of well, Labour. Well, it didn't happen, but if we did, it's my estimate that the market would have taken offence to that. The pound would have dumped, and so too would the FTSE, and we were anticipating a potential break of the low of this bearish pin bar reversal of the weekly. So we duly had our orders placed just below the low of last week, minus additional pip, with a stop loss above what was the high of this week. However, we didn't get triggered into the trade. The great thing about our initial entry was the fact that there would have had to have been significant downside action and significant turbulence in the market in order to trigger us into that sell trade, but there wasn't, and quite frankly we've saved ourselves getting into what would have been a dud trade anyway, and we're only in the winning trade being pound Aussie dollar, or pound AUD, whatever you like to call it. On the weekly for pound AUD as well, it's very encouraging because we've got actually an engulfing bar which has taken out the high and the low of the previous 1, 2, 3, 4, 5 bars. That's very powerful. If it closes as a bullish bar, that is a very bullish side for further upside, well, continuation. Okay, so we're not that far away from our target here, so just hang on in there. If you wanted a high probability outcome with a low reward, then by all means take your, or scale out around about now, halfway between your entry and your stop loss, but if you wanted to go for that lower probability outcome but accept a higher reward potential for it, then by all means ride it up to the previous swing high, trading for every second by a bar as per our standard pin bar reversal strategy. And this is an aggressive but objective way of managing your trades. If you're trading below the low of every second by a bar, and if this does close as a buy bar, then you might just want to trail it. Even if it closes as a bearish pin bar reversal, you might want to try your stop loss below the low, just in case it comes all the way back down. And suffice it to say, nobody got fired for taking a profit. What concerns me slightly about this one is the fact that we do have at the top of an intermediate range here, and if we get the close below this point here, then we could have reasonable grounds to be a little bit concerned about this one. Bearing in mind we've got essentially what is a rectangular formation as well as a triangular formation. I know it can be a little bit confusing looking at it. We've got the rectangle formation here, and we've got a potential square here, or rectangle right here. So we just need to be adaptive to this, alright? And as I said before, sometimes it's damned if you do, damned if you don't. But I can rest assured that those people who do trail their stop loss to the low of Friday, if it does close as a buy bar or indeed a bearish pin bar reversal, and the market comes down to take you out the trade, that at least you've got what is essentially a 2-to-1 reward to risk trade here, and it's a very good trade outcome so far. So, you know, fantastic, and this is why news is important in the form of elections. It drives the market, and if we're at the right side of the market and we've got high reward to risk potential, then we stand to make a lot more in our trade than we stand to lose if we are wrong.